Walt, we thought it was going to be a quiet week in autonomy because New York schools are out. And a very good dear friend of mine, Gus, says all the time, the more you pay, the less they go. And believe me, we're seeing that here in Florida. There's traffic everywhere. There's New York license plates. And oh, I'm sorry, Walt, the New York rudeness came along with them because they think they're entitled. But listen, this is a MAGA state, not a blue state. We don't have Governor Hochul. So now that I said that, let's get on to autonomy. We had lots of listener feedback this week on whether trucking OEMs are kingmakers. I'll say this, their power is diminishing pretty greatly, and we'll get into that. We had more feedback on our LiDAR banter. The more you and I talk about LiDAR, the more incoming X-bombs we get from various individuals taking sides, and potentially, I think that a lot of them are retail investors. We had movement on the autonomy front in DC, really good news there. And then David Risher, CEO of Lyft, put out their manifesto for what they want to do with autonomy. And highlighting that, Mr. Risher basically said Elon Musk was right.
Grayson, maybe what you need for all those New Yorkers that come down there during spring break weeks is a little congestion pricing. Maybe, you put on a couple of tolls, in parts of Florida, keep them down in, the South Beach area in Miami and don't let them up in your area. What are your thoughts on that?
That'd be government intervention. That would be a very, very bad idea. And the state would not go for that.
Not in the state of Florida. Well, apparently it's not happening in New York either. I think our guy, head of DOT, coming over the top and getting rid of congestion pricing. Yeah, let's talk about Risher from Lyft, who basically came out with this, what I will call a manifesto, right? Fairly generic. I think we've seen Uber do this already on their earnings call, and we broke down their kind of 5 pillars of autonomy. Uber's doing a great job, I think, in part because they have a Balaji who used to be in investor relations, back in the business, super smart on autonomy, now kind of formulating their messaging, which is, pretty obvious, and we've, talked about that at great length on this podcast. So they had their 5 pillars. Lyft has their 7 or 6 or 7 pillars, their vision for the AV chain, which, again, I'm going to read them off, but I think to our listeners, this is obvious. Self-driving technology, vehicle manufacturing, asset ownership and financing, fleet management, mobility platform and marketplace, and then rider demand and experience. Which of these 7 stand out to you as like unique or different, or when you read the whole thing, what kind of stood out to you as what they were trying to emphasize?
Vehicle manufacturing. That stood out to me because that's not a core strength of Lyft. It signals to me that the partnership strategy is accelerating. And as you've talked about on past podcasts, they're looking for an autonomous vehicle and they're looking to partner with OEMs to get more vehicles to put them on the platform. That's what that signals to me.
Yeah, and that's part of the fragmentation. The issue is they don't own their own autonomy technology. So the vehicle manufacturing is, I think stuff that we talked about as it relates to neuro on our last podcast, where the platform plays a role. They have to bring money, because bringing your platform alone is not, I think, going to get it done. They have to, I think, also provide dollars where they're a participant in making sure that the OEMs are moving along and getting this. At some point, it flips on the OEMs where, these are companies trading at $5 PEs that are flat on their ass, and that they're going to have to, I think, develop an AV strategy, because I think the volumes are going to be there to drive that. But I think that's the partnership role that they play. It's not just, hey, I'm the platform. You got to write a check, man.
What type of check size do you think those are going to have to be?
It depends. I mean, I think in the early days, we'll get into fleets next, but fleets are in the tens. But we can see the dollars that are spent from autonomy companies. You're talking about hundreds of millions of dollars. And then I guess the implication of your question is a company with a $5 billion market cap really in the same position as Uber in terms of the size of the checks that they can actually write. Probably not. So, yeah, I don't know. I don't know how they can drive, how Lyft can be a driver of ensuring vehicle manufacturing exists, other than basically saying, hey, we're open to put AVs on our platform. We will deliver demand to them, so make them. But of course you are. That's, I don't think the OEMs needed Lyft to raise their hand and say, yeah, we're gonna generate demand if you start making a fragmented market. Uber ends up being the more dramatic player given their global footprint.
What if those vehicles were personally owned and the consumer could put their vehicles on the Lyft network, very similar to what Mr. Musk has talked about with the Tesla network.
I mean, I don't know why you phrase that as a what if. I think why we should be highlighting what you just said is something that was in this manifesto that I thought was very interesting, where Risher specifically, kind of hat tipped it, head nodded Elon. He said, and let's quote, "As the cost of AV technology comes down and the availability broadens, we want every self-driving car to be Lyft ready with turnkey access to our platform. That will make it possible for small and medium-sized fleet owners to invest in AV fleets that can be integrated into our supply the same way black cars and livery fleets are today." And then here's the key sentence. "A little further down the road, when Lyft-ready AV features come standard in every car, any car owner will become a potential partner." Okay? Any car owner. So like that is basically what Elon talked about in terms of your Tesla sitting in your whatever, your driveway, going out at 11 o'clock at night on the Friday when there's that peak demand. And that's, to me, that's an endorsement that is, again, he says a little further down the road. I'm sure if you press these guys on it, it's going to be like, well, that's 10 years away. And like by that time, all these different things are going to happen. The risk in that, though, Grayson, is, that addresses the supply issue that many have talked about that autonomy can't overcome. You have a lot of talking heads out there like, oh my God, I've done the math and no way Waymo or Tesla will ever take over Lyft because, they could never have the fleet size. But if we're now acknowledging that private owners could, have their cars go out and be part of the supply and then come home and be their personally owned car, then how does that argument hold up?
It doesn't. You must be watching CNBC too much.
Grayson, I see this on X from people that we both know exclaiming this on their X feeds, not only on CNBC. So don't attack the Wall Street analysts, because I'm sure there's a couple of people out there that as well as I that have pushed this same theory.
Yes, they push the same theory, but what they fundamentally miss is that the average mainstream consumer is still drowning in inflation and they're struggling. The average mainstream consumer buying a vehicle is a very, very large purchase. In some cases, the largest purchase they'll ever make in their life. If they can purchase a vehicle and or lease a vehicle and then turn it into a cash generating asset where it pays for the vehicle for the entire month and pays for the insurance, pays for the gas, that demand will accelerate. That just benefits Lyft. The consumer will drive Lyft's growth.
Yes, but I also think there's the possibility that with the collapse and consolidation of OEMs, because of the change in the model altogether, and you get greater scale, and you just change how cars are developed, software-defined cars, moving to Foxconn, like taking a BYD approach, because if for competitive reasons, the overall cost of the car is going to come down. The technology to make it autonomous is going to come down. And to your point, for some, you can offset the cost of that car with autonomy. So then the pushback to me, well, who's going to allow that? Who's going to allow that to happen on their car? Well, you have, lots of Uber drivers and Lyft drivers today that are out there driving their cars and allowing their cars to be subject to whatever the wear and tear every day in their cars. So like, those are the people, which is exactly what Risher was saying in his piece, is like, now that Uber or that Lyft driver can do something else, send their car out and earn some amount of money, and then, be doing something else with their life. I mean, that was his point.
He's right. It's going to grow the Lyft market. Lyft currently completes 2 million rides per day in all 50 states in Canada. You start adding on these autonomous vehicles, number is going to increase. It is going to be a positive catalyst for Lyft. And what the consumer is going to do furthermore, they're going to put pressure on the OEMs to build these autonomous vehicles, because they're going to buy it from Foxconn or BYD or another OEM that's doing it. The consumer is really going to dictate this market, and we can all go back and thank Mr. Musk for what he's doing with that. It's the same way that Mr. Musk drove the market towards electrification. Mr. Musk is driving it towards personal ownership of autonomous vehicles.
I mean, again, you may be right. And that seemed like the more logical path here, in that it's positive for Uber and Lyft because it speaks to the fragmentation that's so important. However, it again validates this concept of private car ownership. And like that is the one missing piece in terms of like, how do I, if I had one autonomous fleet with my own platform, how do I get the scale? Like that's exactly how people have defended Uber and saying you can't, they'll never be able to get the scale. Like now you've just demonstrated how they do it. Now, look, it may be that like if I'm Waymo and I still haven't licensed my technology to another OEM, I'm not going to allow another autonomous technology on my platform to handle all the rides. I get it. There's like complications to work through there, but let's look at it from the Tesla standpoint. They don't license the technology. They stay, true to their existing mission, like assuming that the technology ends up working, which I know a lot of our listeners don't believe is going to happen. Like that is the path to a competitive, fully autonomous fleet.
It is. I'm currently driving a Tesla with 13.2.7. I will say to our listeners at Tesla that listen, you got to figure out school zones. When you go from a 30 to a 20 to a 15 in a school zone, you got to have to figure out school zones if you're truly going to crack autonomy. It has to happen.
I mean, they have to figure out more than that. There was something we didn't talk about in last week's podcast, but you had a guy, I think, merging a lane or going off a lane, driving his cyber truck into a friggin' tree or a pole or something. I mean, like obviously there's work to be done, and there's still a lot of debate on what we'll see come out of that company in June. Let's go back to Lyft in terms of other elements here, and fleet management being a big part of how all this works. They made a big point in this manifesto, again, that I'm going to call it, to really emphasize what I would call the flex drive, right? And, I think we need to do more work on understanding what flex drive really does, because my perception is more of like it just enables you, if you didn't own a car, to be able to own a car, to lease a car, right? But the way they position is our AV strategy then is clear. Our world-class fleet management, so they're calling FlexDrive world-class fleet management. Sophisticated marketplace engine, that's just the platform. Large-scale demand, that's the platform. Represent the best way for AV companies, OEMs, and fleet owners to commercialize their assets. So they're pushing forward FlexDrive as a differentiation so that when, let's say, Nuro partners with whoever, Ford, to make up a name, even though they may actually, Uber might be their partner there. But as other technology companies partner with OEMs, that FlexDrive is going to be a reason why Lyft is going to be brought in as the third partner. Like, are we missing something on FlexDrive? I mean, are they doing fueling? Are they doing car cleaning? Like, what's the most important element of fleet management?
Maintenance. Nobody thinks about it, but maintenance is the single most important thing. Tire tread. Are the brakes working? Are the seatbelts working? It all really comes down to maintenance at the end of the day. The interesting statistic to highlight here on Lyft, fleets under Lyft's management maintain nearly 90% utilization on our platform. It's uptime. Go speak to Lee White, former UPS executive. He'll tell you the number one metric they care about the most, uptime. Fleet management with FlexDrive can give Lyft the uptime to fully optimize that AV fleet.
Right. So to me, that part of uptime is location. Where is where is that group of cars going to get serviced, stored until they're sent out into the market? And then when you pick an advantageous location, do you have power there? So the timeline to getting power there. And then maybe the third leg of the stool on that one is, which you love to talk about, I'm surprised you didn't bring it up, robots. Like, do you have robots at some point layered in, cleaning these cars in terms of the management?
You're seeing companies now that are popping up that are offering, let's call them the quote unquote depots, mostly around airports. There's a lot of movement around LAX, and this is going back 10, 12 years. Lyft had a depot by LAX. I don't know today if it still does, but there are several large scale charging companies that are charging fleet vehicles down by LAX. Based on that trend, I fully expect to see them pop up around airports, and then in some cases they're going to have to pop up in the urban core, because as you and I both know, airports are one of the largest origination points.
Yeah, but you also, when you're peak and your Friday nights, the bars are an origination point as well. So beyond that, I'm sure they're going to argue like, oh yeah, but you have to manage the fleet, and when your software already manages this massive an amorphous supply of drivers deciding when they're going to come on the network or off the network, and then the demand that exists out there. Managing like cars that are there at your at your disposal doesn't seem like that complex of an issue that couldn't be designed otherwise. Again, maybe I'm missing that, and we just have to learn more about FlexDrive. So, to our Lyft listeners, definitely want to learn more about FlexDrive. I'm having a hard time seeing how that is going to be. I mean, again, I know like if you're trying to make your autonomy story out there, like you got to lean forward with like what you got that the other guy doesn't necessarily have. And by the way, when the other guy doesn't necessarily have it, they don't want it. Like I've asked this, like I don't think there's an intent to own. There's certainly an opportunity for them to own. I think if my advice to Dara would be like, fuck it, do a real estate play and then build up all of these locations. And 5 years from now, spin it off to somebody like private equity guy. And I think you'd make money that way, but whatever. That is not what they want to do. Maybe Lyft is leaning in on that. I just don't know if FlexDrive in its current state is the answer.
Well, FlexDrive is going to need charging infrastructure, fueling infrastructure. If you look at the terawatts of the world, that's what you're going to need.
I mean, that's what the OEMs like. That would be a missing part that the OEMs need, which they're emphasizing is like, oh, Uber's doing it as a third party, but like, okay, but are you really doing that, or are you just doing leasing? Let's talk about like what is next for Lyft. Because obviously actual analysis. They would get something done with Waymo. It's still not there. Like, any thoughts on where Waymo's at in terms of their Lyft relationship?
Unsure. I will say I like the thought pieces that are coming out from Lyft because they're taking control of the narrative, and we're talking about it now. So it's a huge plus, and we know that the executives at Lyft listen. So I'm really liking that. As it relates to Waymo, I think a lot about this. What if Waymo just flooded the market and did a deal with everybody and became the quote unquote de facto robo-taxi, and that includes Lyft?
That would be great for Uber and Lyft, but I don't think, if that was the case, then why are they bothering with doing markets on their own? And by that argument, every new market that they should announce should be a partner with either Lyft or Uber.
Or both.
Or both. Sure. Like I'm not sure there's any exclusivity in a market. I don't know. I mean, I think the jury's still out on that. Certainly I don't think there's any rumblings one way or another. No one's out there aggressively speculating on it or claiming to know. Maybe they don't even know. They're going to see how the market evolves. But I don't see the downside of doing something with Lyft in the near term. So let's just assume my initial prediction comes true. You see some market get announced with Waymo and Lyft together. How do you think, because this answer can change based on how stocks move and what's the latest in the market. Does Uber stock go down because, hey, they're doing something with a competitor, or does it go up because, oh, look, Waymo is going the partnering route and they're not going to do a go alone, and that reduces our long-term risk?
I think it stays flat. Maybe a small move to the downside. I don't see a big move on it either way. I just think from the consumer standpoint, it's really good. For the market as a whole, it's really good because I can't tell you how many times I've been in Uber and you see a Lyft sign, or you've been in the Lyft and see an Uber sign. So we already have it there. To me, this is me being me. One of the defining factors that I'm looking for right now, Uber has an exclusive deal with American Express. You get the $15 credit, you get all sorts of other perks along with the Platinum card. Well, if you have the JPM card, or you have the Sapphire card, or you have the Reserve card, you get 10x points on your Lyft rides. That could be a defining factor. The interesting thing is the JP Morgan relationship with Lyft comes up in March. So I'm looking to see if they renew that, because if I can get a Waymo on the Lyft, and I can get 10x points, where if I can't get it on the Uber for the same thing, I'm going to take the points and go with Lyft. That's going to be the big thing, is how are those credit card deals going to work out when they start, if Waymo did do deals with both of them?
I mean, you could also have deals with telcos as well, right? I mean, T-Mobile loves to do this stuff, get your free Wi-Fi on airplanes. That stuff's good, man, because it's sticky. Like when Verizon did the deal with Disney, I think it added like 5 million Disney Plus subs. Those were lower churn customers. It's on your cell phone bill. So yeah, I think you're right in watching some of those affinity deals, and how that impacts the business. I don't know if Waymo's success is going to be determined one way or another if there happens to be a credit card deal, though.
It'll help. T-Mobile's a great partner. Look at Netflix. Your partner, Rich Greenfield, I'll say what he is. He's a Netflix bull, and he's been right all along on his Netflix call. I have T-Mobile. I pay for Netflix through T-Mobile, and it's discounted through that deal. I like those deals. Consumers like those deals. T-Mobile has a deal with May Mobility. May Mobility is running on the Lyft network this year in Atlanta. Right now, they're operating without Lyft, and Peachtree, Georgia are fully driverless, but T-Mobile's the partner on that. Perhaps there's a three-way deal between May Mobility, T-Mobile, and Lyft in the works.
I mean, if T-Mobile is going to partner with anyone, I would guess that it's going to be Tesla, given the relationship they have on the satellite front, with delivering satellite connectivity to their phones. But, until Tesla's really ready to get going, which, they claim is going to be this year and into next, sure, May Mobility is the one. So if you're in general, let's back up and just look at Lyft. You're more bullish on the May Mobility partnership than you are Mobileye for Lyft.
100% yes. And I'm going to visit Evan Olson and the team at May Mobility next month. And I'm going for a driver out ride in the snow in Ann Arbor, Michigan. So I'm looking forward to that.
And what about Mobileye? Do you think they're just going to be behind May Mobility and what they can provide to Lyft?
I've never been in a level 4 Mobileye vehicle. I want to say that. I read the analyst reports. They're mixed. I talk to individuals that work with Mobileye, and I'll just say this point blank, everything I hear is mixed. I don't have any real world experience with the Mobileye L4. The May Mobility I do, and I happen to have a relationship with their founder and CEO, Evan Olson, and so I have insight into that. And I also feel from a market position that May Mobility is better positioned to capitalize on this because the two largest investors on their cap table are NTT, the large Japanese telco company, and Toyota. And Toyota, as part of that relationship with May Mobility, is giving them special versions with dual redundancy built for autonomous driving, Sienna minivans, right off the line.
Look, the bottom line is there's beyond Waymo and Tesla, there's a lot of technology companies, whether they're initially working with trucks or, about to announce partnerships with OEMs or have existing partnerships announced that we just can't ignore. Yes, 5 years from now, most of them will not exist, but a few will. And, the market's changing pretty quickly. So we wish them all well and honestly hope that they all succeed in whatever their initial rollout dates have been that have been announced, that they deliver on them.
We want everybody to succeed. This is a market where the tide lifts all boats. We want every company in this market to be successful. Certain companies just have to do a better job of communicating what they have and giving access to certain individuals for their products so we can properly evaluate it.
Grayson, what happened in DC this week? Anything new?
Oh, we had really good news. We had very good news. We had really, really good news. We had the confirmation hearing for Deputy Secretary Bradbury. And during his hearing, Mr. Bradbury said the following, and I'm going to quote here from his testimony. Quote unquote, "I am very excited about autonomous vehicles. Yippee yay." I said the yippee yay part. And then Mr. Bradbury later called for a federal regulatory framework. It's coming. He's a deputy secretary for the Department of Transportation, the second most important person in U.S. DOT. And we've got a rock star coming up that's going through Senate confirmation right now, Mr. Jonathan Morrison for NHTSA Administrator. We have Secretary Duffy at the top as DOT Secretary. Mr. Bradbury as DepSec. And then we're going to have Mr. Morrison as NHTSA Administrator. We've got an all-star cast of individuals that can push through an autonomous vehicle framework that will allow America to usher in the golden age of autonomy, which I call the autonomy economy.
I don't know if all these autonomous cars are going to be able to get around New York now that Duffy has taken away my congestion pricing. Sorry, I had to get that in there. Look, Bradbury also got questioned a lot about from certain, I don't know, was it senators or congressmen? I can't recall, but they were obviously getting fed questions by people in the industry. Are you going to include LiDAR? Are you going to have, systems that are monitoring the driver? And I think while a typical politician, he kind of didn't answer, but I think he generally, the take I got was like, look, let technology figure itself out. We're not here to specify that cars should have LiDAR or don't. He didn't say that directly, so LiDAR people relax. Or should or shouldn't have, cameras that monitor the driver. And look, that is the right way. Like, for those of you that are going to come and say, like, oh no, you should require it. Like, that's not how innovation works, right? You should allow the companies to determine which solution works best. And maybe many people believe that, a certain way has to be done. Guess what? You could be wrong, and I could be wrong. Let the market decide what is the most successful solution. Components, how you put the software together to do it. And I think Bradbury, while he didn't answer directly, as no one really does at these Senate meetings, and again, these things are typically just for politicians to say they're, get their own sound bites. I think that's the takeaway, and that's certainly what I'm expecting from this administration.
They're going to let the market decide. Mr. Bradbury clearly stated, let the market decide. Sir, are you going to put this in there? Let the market decide. Are you going to mandate LiDAR? No, let the market decide. Luminar went out there and lobbied heavily to mandate it. The wrong decision because it benefits their own interest. And when you look at the LiDAR market, I have a lot of concerns. The market cap for the pure LiDAR plays that are publicly traded combined, Walt, $3.5 billion US dollars, with Hesai accounting for over 50% of that combined market cap, because Hesai's market cap is $2.29 billion. Everybody else combined, they're a lot less than that. They're less than $1 billion. So is this market even investable? Where's it going? Because I know that the bows and arrows are going to come on X. And I will say for the individuals, please hold judgment. On Tuesday in the Road to Autonomy, we are publishing a fantastic conversation with Angus Pakalal, the co-founder and CEO of Ousters LiDAR. So I highly recommend you check that out. Now, Walt, back to the market. Where is it?
I think the market's still developing, and I spent a lot of time with Ava, the founders there, who are part of the torque solution that's going into on the trucking side of things, Daimler. But Ava's got a lot of other things lined up, and they're going to be selling directly into car manufacturers, whether it's for autonomy level 3, level 4. Similar stories, right, for a lot of these companies, and everyone has what their claim of differentiation is, but they're kind of at the early stages of the hockey stick in terms of what is where the growth is going to come. And I'm rooting for all of them that they do well, whether it's in trucks, it's in cars, or it's in infrastructure. You could also, by the way, have the best technology and show me something that looks great, but you still actually have to get the deals. And you have to get the deals with a partner that actually sells a lot of product. And the issue that we were talking about last week is companies that are trying to come to market this year, right? They have to deliver products. They want to deliver partnerships this year. And they already have Hesai in their products today. Not something 3 months from now, 6 months from now, 9 months from now, or next year. It's today. So to the extent that you can use something that's not Hesai, sure. Is your product available in scale today and it's been tested and integrated into these products? Is that answer true? So if there's some timeline, you're talking about companies themselves that have a limited amount of capital in terms to deliver to their investors with their autonomous technology and getting partnerships in the market. So as a result, the conversations that we've had with these companies make it clear that Hesai is an important component to that. That is not debatable, just not debatable. If things get changed out in the near term, great. We'll come on and admit that we're wrong. Doubt that happens, but certainly over the long term, a lot of these alternative solutions can exist. I didn't listen to the whole testimony. Were there any questions about Hesai, and would that even be relevant to ask Bradbury whether we should allow Chinese components within our American cars?
There was no question specifically related to Hesai, and as I said on last week's podcast, Hesai is going to have to spin out the U.S. division, because if they have a clear market opportunity now, because you talked about capital to actually deliver. Innoviz only has $68 million in capital on hand. Hesai is $405.5 million. That's U.S. dollars. Ouster has $182 million. Luminar has $223 million. And Avaya has $162.8 million. Not a lot of capital there to truly innovate with a market that's shrinking, because you have Vallejo, you have Bosch, you have Magna, you have Continental with very deep pockets and extensive resources that are moving into this market. I see massive consolidation coming. Right now, there's 5 pure publicly traded LiDAR companies. Consolidation's coming and business pivots are coming. They have to.
So if that happens, let's go back to Aurora. Aurora purchased, companies that do LiDAR, and then they've developed it on their own. And this is part of their shtick in terms of what differentiates them. Is it possible that one of these companies gets bought out? And again, is that the right model? Wouldn't you rather, have an Ava effectively built into multiple OEMs and that multiple autonomy partners use it in order to them to benefit from the shared R&D that might be required, or the shared scale that might be required to get the cost down for everybody? I mean, that's effectively what many companies have said that haven't developed it on their own. But again, they're just talking their own book.
Yes. In theory, yes. But if I'm looking at this and I'm being very blunt, it's a 2-horse race between Hesai and Ouster at this point, from the pure play LiDAR points. That's really where it's going. And on the podcast, the CEO of Ouster, he talked in depth about their growing infrastructure business. So you're seeing a new line of business growing there, not just focused purely on automotive.
So I'm going to disagree. I think that it's still too early to call it a two-horse race. I think these other companies, Luminar, Ava, Innoviz, have an opportunity to take share. You know, there's still deals to be made that are out there, and we'll have to watch it carefully. Like, again, we don't even know. Like, Aurora will tell us, and Waymo will tell us, like, oh, theirs is the best. But do we really know, like, how much those things cost, and if they can really get something cheaper that's better, because these other companies are developing things with small teams, even though they don't have a ton of capital to do it? I don't know. I'm not going to rule it out. I think we'll keep that as an opportunity for these companies to succeed. I think there's still an open playing field. We all agree that there's probably not going to be 6 or 7 of anything in 5 years, but I'm not convinced that it's those two. And again, Hesai, last week you talked about them splitting up the company, but they do still face regulatory risk with our government.
Yes, but they also have a fast growing market in mainland China that can support a business.
That's fine. I don't think that helps the car manufacturers that want to sell into the US and perhaps Europe, depending on how our relationship with Western markets continues from here.
Very good point. Just watch the geopolitics. Geopolitics aside, we have a friend of the podcast. He's a friend of ours, Pete Bigelow, host of the world famous Bigelow Battle. Pete, I love you. You did the interview with Raquel, and why didn't you reference the Bigelow Battle, as Walt brilliantly named? We can get a belt made, Dooner style, WWE, WWF, whatever term you want to use, and give it the Bigelow Battle belt, and you could pass it out at conferences. Because on Pete's interview with Raquel on the Shift podcast, which is really good for the record, Raquel said, she was the CEO of Waabi, that they're going to go driver out on public roads by the end of the year. Drum roll, Walt prediction corner. Are they going to do it? Yes or no?
I haven't had an opportunity to spend a lot of time with Waabi, but I'm just, so this is a gut reaction. I don't think that they will, which is interesting because during that podcast, she on multiple occasions was insisting like, oh, they're the only company that have delivered on things that they say that they're going to deliver on. And like even the 2025, I think Pete's assumption during the podcast was that it was going to be done with Volvo. And then Pete added a post note to the podcast saying like, he talked to Volvo Autonomous and they're like, nah, it's not us. We're not going to be driver out with Waabi by year end. So then that means like, who is it? Like, is there an announcement that's unannounced, like a partnership that's unannounced? Or is it maybe they're just saying like, hey, we're going to be driver out because we're going to just buy a truck and slap the kid on it and like make a drive in Texas somewhere, and that's going to be how we're delivering on this prediction.
They're currently testing on Peterbilt trucks in Texas. Registered, you go look it up in the US DOT logs. So we know that. PACCAR has vetoed Aurora going driver out on public roads. Multiple companies going, they will not allow a company to go driver out on public roads with their trucks if you're part of the development program, which I believe Waabi is. Need to confirm that. But they will not allow it to go because the family that controls PACCAR is afraid that if something was to happen, they would lose the dividend. What's the path forward? And because the deal with Daimler, those seats are all locked up. There's no seats available at Daimler. Do they go to Hyundai? Do they go to try and cut a deal with... She bragged on the podcast that Porsche SE was an investor and that they are the voting control over Traton, which has Navistar trucks. Do they try and do a deal with Navistar? Where do you see this going?
Man, you just dropped a bunch of trucking names. That just made my head spin. I couldn't really totally follow that, but let me ask you this question. Why couldn't they just go and buy a PACCAR truck and slap the kid on it?
They can. And that goes back to my whole theory where the OEM's power is diminishing. We saw it on Aurora's earnings call. Mr. Urmson broke down the Aurora kit. We're seeing it what Kodiak's doing with the sensor pods. We're seeing what Bot Auto is doing. I was on the phone with the Bot Auto executive team, and they said I'm allowed to say this here publicly on the record. The Bot Auto team has built redundancy. I repeat, Walt, redundancy into the trucks. They've done it. You don't need the OEM to do that. Bot Auto has successfully done that. And for the record, I have been in the Bot Auto truck, and the run was flawless. No interventions.
Okay, so then why do we care that the PACCAR family or whoever it is cares about their distribution if theoretically you can just slap this on after the fact? We shouldn't, right?
We shouldn't. No, what you need to focus on, and Munich Re, there's syndicates through Lloyd's that will handle this, just make sure you have a really good captive. And there is availability in the market for those captives.
Okay, so we've established that. Maybe that's our view. Maybe that's your view more so than mine. However, on that podcast with Pete Bigelow of Bigelow Battle, Raquel, sorry if I mispronounced your name, really enjoyed the podcast, but she made with emphasis the point that they worked closely with Volvo. It was almost like she was, and I'm saying this tongue in cheek, right? I'm sure she didn't listen to the podcast. Maybe she did, but was trying to refute what we were saying last week and how, that was theoretically the Kodiak way of doing things. She's like, oh no, we work closely with Volvo and like we have their engineers and everything's going on in Virginia and there's like this tight integration. So you can't really, by the way, say that. And by the way, I heard the same feedback this week from Aurora saying like, look, you're underestimating the amount of integration and co-work that needs to be done with the trucking company in order to get all this stuff to work. It's not just, even though we're just putting the kit on online, there's still a lot of integration work that we did working with those trucking companies in order to do that. But again, like if that's the key, let's get back to Waabi. If that is her view that it has to be integrated and it's not going to be Volvo that's driver out in 2025, then who is it going to be? It would have to be someone that you're literally working with closely today that would then be your driver out partner for the end of 2025. And I'm not sure that necessarily exists. So it would be actually ironic if meeting that milestone was like them strapping on their kit to a truck that they just bought after stating how important it is to work with the OEM themselves in order to make that happen.
You missed the key line because I read the transcript and verified this with the audio because that's what we do on Autonomy Markets. Raquel said, quote unquote, about to closely work with Volvo. About to is the key word. You have not started working closely with them. And I called the company for comment and I got this comment from Waabi. Waabi has not, I repeat, not made a decision of who the OEM will be. All we know is it's not going to be Volvo. So there's a lot of contradicting going on here.
Yeah, again, that's fine. My only point is for it to happen the way that it's been presented. Like let's just say two approaches. Like let's call it the Aurora approach. Yes, we need to integrate, and the partnerships with the truckers is very important. So that kind of puts them up as a kingmaker. Versus, let's say Kodiak, like, no, that's not really necessary. You can just add a kit and like, look what, Aurora just said. They're going to just add a kit to the line. And there's no integration. So Waabi's in the Aurora camp where there has to be integration. So like, again, if you're going to hit a milestone that's coming up within 9 months, that integration, I would think that work that you have to do with these trucking companies has to have kind of like those announcements have to be happening now, or those relationships have to be happening now in order for you to hit, because she did say like, hey, we'll be driver out by the end of 2025. So like, how does that happen unless you've got some partnerships based on how you described how your technology is going to work?
From what we know and all the public available documents, there's no path for Waabi to go driver out this year at this point from what we know. However, there's a very clear path for Aurora to go driver out because they've been very public for years, working with both PACCAR and Volvo. And I will say for the record, we still do not know who the OEM is, but there's a multi-year track record of working closely with both OEMs. And then there's the outlier with Shouty Ho and Bot Auto. They have the redundancy. They don't need anybody's permission. They could go driver out this year. They have a clear path to doing it.
Yeah, look, certainly understanding these relationships are important. Let's look at Waymo. Does Jaguar do anything other than just send them cars? Like, is there integration with the technology that's there? Like, I don't think there is.
There was an original press release that was put out when John Krafchick was CEO of Waymo, very light on details. There is a quote-unquote relationship. We don't know to what extent that relationship, because there's been no follow-up documents ever published.
Is the Waymo technology getting installed on the line of the Jaguar that's being made?
No, it's being installed with a Magna upfitter.
That's fine. So that's where you are today. Like, phase 2 with Hyundai, it is integrated. I don't know. Maybe there's a lot more work there. Like, to me, my gut tells me you have to actually work with the OEMs to get it done, and that makes more sense. I'm not going to assume that that is definitively the case, but that certainly, I think, makes more sense. However, at the end of the day, like, there's a lot of companies out there, and whether you're working with the OEM or not, your technology has to work. Like, I don't care if it's strapped on or integrated, whatever it is. I need to get in that car and it feels right and it doesn't get into an accident. And I think that those are the things, those are the milestones that are going to matter the most in 2025 and 2026. It's not about the partnerships, this, that, and the other thing. Is, does your technology work? And can you get it on the road? And ideally, get it on the road with a paying customer. Okay, Kodiak has a paying customer. Maybe it's not on the road, they have a paying customer. Aurora will have, I think, a paying customer, within the next couple of months. Like, so for these other companies, like, if we all believe that it's going to be a consolidated market, there's going to be losers. Like, you need to get products on the road, no matter how it gets done.
The differentiator in all of this, as of today, as we're speaking here, February 20th, Kodiak has revenue. And when April comes around, Aurora's going to have revenue, consistent revenue. And the interesting part about the Kodiak thing, which is not talked a lot about, which to me is very interesting, which goes back to what you talk about with REITs, Kodiak does not own that fleet. They don't have to hold it on their balance sheet. They're acting as a software licensing fee. That's fascinating.
Yeah, that's fine. And I think that's a separate issue than whether you're partnered with the OEM or not. Maybe these things become easier with or without partnerships, but I'm just going to restate things. The same thing I've said over and over on this podcast. Like, if you create a good business model, money will follow. If the price of the car and the technology get down and the maintenance get down to a point where, you're making money, because as Uber would state, it's less than $2 a mile, then the money is going to flow to those cars because you're going to be able to get a return. And I've seen different assumptions that people make on miles per car, year back, like what's the cost of maintenance. Things are kind of all over the map. Overall, the technology has to get, the price has to get down. But before any of that happens, the technology has to work. Right before, like, it's like you're going to the ER, like, you got to get the heart to work first. The heart in this case is the technology, and companies have to prove it with trucks or cars on the road with, someone like a paying consumer or a trucking customer with no accidents, or accidents that are, obviously significantly limited.
It's going to come down to, you're right, technology working in revenue. Investors want to see revenue growth at the end of the day. They want the technology working. That's what they want.
That's part two. That is part, and 100% that's important. And yes, investors want a path to profitability, but we're still in, unless you're Waymo, and I'm just going to stop it there, unless you're Waymo. Obviously, the Tesla people are just going to automatically think that it's going to work, but like, they still have something to prove, right? They still have to launch this thing in June in Austin. Unless you're Waymo, who has effectively proved that their technology works, and will, I think, further prove that very shortly when they hit the highways and they start going to airports. I mean, I saw it in my car. They're getting ready for it. I think it's happening soon. For the rest of them, like, you got to prove that it works, and then we'll move on. And then we'll talk about, okay, how do you get to scale and price and everything else? And I think those things are important, and you shouldn't just ignore them now. But like, the primary focus should be, when these companies get to drive around and get paying customers on there. It doesn't have to be significant revenue, but like, you're actually having people pay for service.
Look at Waymo. They've been extremely disciplined. Under Ruth Port's orders, they shut down Waymo Via, the trucking delivery business, and they purely focused on robotaxis. That discipline is paying off because the technology works, and they're scaling it.
100%. But Waymo is also losing money hand over fist. So great. Now you've proven the technology, right? Now you have to say, like, okay, whether it's Hyundai or whatever it is, now give us the path to how you guys get the cost down, so that whether it's private ownership or you owning your own fleets, but there is a path to have money come in there, because it's not going to work with the equipment that they're putting on an expensive Jaguar today. Like, that is not a business model, right? Great. The technology works. Now tell us phase two is like how you're getting to scale and how you're going to get a return, with what people are paying for rides. Even if you agree with what you and I both agree with, is that the consumer should pay a premium for these rides because it's better, it's actually better service.
And we are going to see some movement in cost down. On Alphabet's Q4 earnings call, Mr. Sundar Pichai came out and said that is a focus of Waymo to get costs down. So there is movement towards cost down. Mr. Pichai clearly seems to be ramping this up as a business, and hopefully on the Q1 25 earnings call, we get more insight into Waymo and perhaps look to that cost reduction, because we're seeing cost reductions go across Alphabet. Hopefully we get that.
Okay, but so let's continue on that. Sorry to belabor this point, but so let's look at Waymo. They are on their X market, fifth market, whatever it is. You've got 1,000 cars. People consider them quote unquote at scale. I went to San Francisco. Everyone's like, oh, it takes 15 minutes for a ride. No, it doesn't. It took 7. The wait time is not long. It's as good as, in many cases, what I was looking for in terms of Uber and Lyft. David Risher from Lyft talked about, he sees them all over the place. And yet, even today, they're still outfitting Jaguars with kits, right? They haven't gotten to this next phase. So I think it's almost unfair of us to look at these other tech companies and be like, oh, when are you getting to full integration for the trucks into the cars and this, that, and the other thing? It's okay, for them to take kits and put it on existing trucks and prove the technology. Those next steps will happen, but you got to prove that people, the technology works such that customers will use it, and then the next steps can follow.
Is it premature where the pressure is being applied to the autonomous trucking companies for certain investors in certain pockets of the market to get an OEM deal?
All of that is certainly positive, but one begets the other. If you show a technology that works, and I think the OEMs will panic and try and come to the technology leader as quickly as possible.
Yeah, the OEMs at some point, I believe, are going to panic. And my advice to them, to quote Rich again, then you become arms dealers. Cut a deal with everybody. Offer the same terms to everybody. Just gobble up the market. If you have the platform, why not take advantage of it? Why do this hanky-panky, oh, you're going to kiss me, you're not going to kiss me? Why not just come right out and do a deal with everybody?
I mean, maybe they'll get to those points shortly. If you're a CEO of a car company and your stock is valued where it's valued, I mean, you need to be whiteboarding and thinking about this stuff. So for all of our McKinsey listeners out there, put one of your decks together and get them on it in terms of opening up to some of these autonomy companies.
And then we'll dissect it and break it down here on Autonomy Markets, because your track record has been not so good. Just remember your Shuttles Up report. Shuttles, you said, were the future. I said they weren't. You disinvited me to your event. Guess who was right? I was. And I don't get the retainers that you get. So I made my point there. And that was an unforced error on their part, not my part. But in the market, there was an unforced error this week. And I'm sorry to belabor this point, but if you're going to build an autonomy company, you have to stay focused. You need to be a pure play. Waymo's showing that. Aurora's showing a lot of discipline with that. Kodiak showing discipline. Bot showing discipline. But Waabi's out there, and Raquel in her interview with Pete Bigelow, of the Bigelow Battle fame here. Got it, Pete, we're branding you that, buddy. She's out there during the year talking about robo-taxis, warehouse robotics, and humanoid robots. This time, though, she emphasized that Porsche SE, the holding company for Porsche Automobile Holdings, is an investor. To me, she's signaling to the market that she's going to explore some sort of robo-taxi deal with Porsche VW. Why this when you even haven't generated $1 from your autonomous trucking business, let alone get a commercial truck? Why are you talking about robo-taxis?
I assume she meant VW because it's just so ironic, because at CES, I was at a lovely party and I met someone from Porsche there. Not going to even name their role. We were talking about autonomy, and I was actually joking with him about how you can get the Taycan at a 30% off because no one wanted the electric Porsche. But the conversation evolved to autonomy, and he's like, well, we're the last ones to want autonomy. If you're buying a Porsche, you're buying it because you want to actually drive the car. You certainly don't want autonomy in a Porsche. But again, I realized that Porsche has more than the 911 or whatever their sports cars that they sell.
Porsche messed up on electric, and guess what's coming back? The gas is coming back. Vroom, vroom. You're going to heir.
It never left. It never left, Grayson. It was always there, and people just kept buying them.
They kept, when their sales are down, and their stock is completely underperformed the market since they've went on a non-traditional Porsche strategy, which was not rooted in the Cayenne strategy, which saved that company. And there are great reports on that. Actually, Harvard Business School did it, not McKinsey. Shot there again. Well, now that I've got my piece out there and I said what I said, and we had a great recording this week, which was fun, what do we need to look for in the markets next week? Are we getting a surprise?
I mean, last week we thought it was going to be quiet. or this past week, and it wasn't. I don't think we really have anything earnings wise, but I don't know. And this autonomy world has given us a pretty steady pace of information. So I don't have anything circled on my calendar. How about you?
Nothing big on my calendar except our next recording date, which I'm looking forward to.
Looking forward to as well.
The future is bright. The future is autonomous. The future is revenue generating businesses. Walt, until next week.